With the announcement about the new infrastructure bill, Joe Biden had a shocking last warning for Cardano holders. What is this all about? Should you as a Cardano holder be worried? Stay tuned to find out everything about it. Repealing the infrastructure bill with a provision that shook the crypto world led to the passage of the bill in the House of Representatives. Specifically, stable coins were being requested to be regulated by the financial regulators to Congress. But what is this all about? Among the provisions in the infrastructure spending package signed into law by U.S. President Joe Biden were requirements to report cryptocurrency transactions for tax purposes. The digital currency industry was strongly opposed to the change, which still hopes to be amended by a bipartisan group of senators. In any case, more problems are still on the way, as Washington has more struggles to face as it attempts to regulate and tax Bitcoin and other cryptocurrencies. And what are these, by the way? First, what changes did the law make? Brokers of cryptocurrency like Coinbase are required to record transactions in 2023, tracking them for customers and the IRS, similar to how stock and bond brokers do it right now with a 1099-B tax form. They'll have to provide the names, addresses, and phone numbers of their customers, along with further details such as gross proceeds of their sales and any capital gains or losses they experienced. In addition to this, businesses receiving payments of $10,000 or more in crypto must report the identities of the senders to the government, which mirrors anti-money laundering rules for cash transactions exceeding $10,000. Second, what are the implications for taxpayers? Not too many, perhaps. As virtual currencies were already classified as property, taxes were already due when they were exchanged or sold, similar to stocks and bonds. For instance, the asset can create a capital loss if it is sold for less than it was purchased for, which will offset gains from other assets. Additionally, someone paid with cryptocurrency has to pay income taxes on it. Additionally, the IRS has already started enforcing penalties on those who didn't report their cryptocurrency transactions. Furthermore, they have recently implemented a requirement that people report any sales, receipts, or transactions involving virtual currencies on their Form 1040. And third, what is the point of requiring more reporting? It is expected to generate more tax revenues, about $28 billion over a decade, based on estimates from the Joint Committee on Taxation. Moreover, a primary concern of cryptocurrency transactions is that they are not taxed since they don't fall within the IRS's jurisdiction. In number 4, what are the controversial aspects of the new requirements? In crypto advocacy circles, the translators say the definition of a crypto broker is overly broad. They say the term applies to any entity that facilitates a transfer of digital assets. According to them, this language could mean that crypto miners, as the ones who handle the computing power for the validation process, and software developers may need to report information that they will not even have access to. Despite her concerns about this, Wyoming Republican Senator Cynthia Lummis expressed her concern about stifling innovation. In number 5, what changes is Congress proposing to make to the law? Lummis and Oregon Democrat Ron Wyden, chairman of the Senate Finance Committee, have proposed a bill that drastically curtails the definition of a broker. That is why, by clarifying that developers of blockchain technology, which enables crypto wallet programs to verify and record transactions, would not have to report them to the IRS. It would ease compliance. Furthermore, Republican Senator Ted Cruz from Texas has proposed removing the crypto section from infrastructure law altogether. As part of the Senate debate, several attempts to amend the legislation were unsuccessful, and these standalone bills are the result of those attempts. What action should investors take in response to the new regulations? So the new law about crypto investments has 2 key considerations for investors who want to stay on the right side of the law. The first thing you need to do is track your cost basis or price at which you bought your cryptocurrency, as accurately as you can to compare it to the actual cost as reported by the exchanges to the IRS. Moreover, it might even be more helpful to enlist the services of a tax professional who is knowledgeable about crypto investments. Also, you must be as transparent as possible regarding which cryptocurrency you own and what you paid for it. Despite the IRS's prior opinion that cryptocurrency is taxable property, the defined reporting requirements will force investors to ensure they report their cryptocurrency transactions accurately and thoroughly. Further, text stated, "I think a lot of folks are in for a big tax surprise. The IRS is going to be tracking this information, and there's no avoiding the tax consequences and gains now. So what is the impact of new infrastructure legislation on Cardano's price?" The new infrastructure bill signed by Biden resulted in Cardano price dropping sharply after it had previously hit multiple all-time highs in the preceding hours. Further, the price of cryptocurrency fluctuates dramatically by the day and even by the hour because of its inherent volatility. However, even the popular big cryptocurrency Cardano frequently sees ups and downs, although experts recommend investing in it over less established cryptocurrencies such as Monero. Due to the newness of cryptocurrency as an asset class, experts suggest that it may be more susceptible to external influence, from celebrities tweeting about specific cryptos to new government regulations that can impact its value as an investment. Meanwhile, what's in store for Cardano in 2022? Can we expect a price increase? While Cardano's price surged by as much as 400% during the year, it spent most of the year below the US $2 mark. Further, with Bitcoin and Ethereum leading the way, cryptocurrency has been making huge waves in the investment sphere. However, Cardano, one of the new cryptos, has increased the competition among the top cryptos. Further, Cardano's digital token ADA is currently ranked 6th in terms of cryptocurrency market capitalization. In September, the cryptocurrency reached a record high of US $3 after a price surge and is currently trading at US $1.38. And despite the price surge, Cardano remained below the US $2 mark for most of the year. Even though we don't know what the future holds for ADA, we consider the possibilities of it, whether it may reach record highs, and what will set off its value in the coming year. As the best Ethereum killer to date, Cardano has gained traction in the past year. Additionally, ADA has been an excellent investment for both new and existing investors, as evidenced by its historical price action. Nevertheless, before you invest in Cardano, it is essential to learn about its long-term performance and price prediction, as is the case with all cryptocurrencies. However, you should also keep an eye out for the new factors that might influence its value in the future. It is no secret that nobody can predict whether cryptocurrencies will succeed as good investments in the future. Nonetheless, if you're confident that ADA's long-term potential is legitimate, then you must be prepared to see through the waves of volatility. Even though ADA may be the next big thing in cryptocurrency, we take a look at the digital token's trajectory in 2022 and beyond. Due to the mass adoption, Cardano's value is expected to significantly increase in the coming years. Though it is uncertain how much ADA's market capitalization will grow, one thing is for sure: its price will continue to rise. When traders took profits following a record high in September, ADA dropped to a moderate value. Furthermore, Cardano's projected value will reach $3 in 2022 from its current value of $2 according to prediction. Further rises will bring the digital token to an average of US $4.87 by 2025 and US $7.32 by 2028. Now, what is driving the price of ADA? Cardano's price is headed for a massive rise in 2022 due to numerous factors. As an example, Cardano will also be adopted in an institutional setting sometime in the future. Moreover, the value will subsequently rise as the investment grows. Also, ADA has been on its heels due to the market focus on supply and demand. As cryptocurrencies have a limited supply, demand-side conditions are more important for price determination than supply-side conditions. Also contributing to its growth is its eco-friendly features, making it stand out from popular digital currencies like Bitcoin and Ethereum. As well as the software update, the crypto network has a new marketing campaign to position it as the biggest competitor for Ethereum. On the second weekend of December, Cardano was up by 8.4% from its previous price and was trading at the price of $1.35 per token. With a market cap of $43.4 billion and a 24-hour trading volume of 1.55 billion. Don't forget to enter the giveaway. Look at the comments section. Make sure you click the subscribe and bell buttons.